Market crashes are common in today's economy. What goes up must go down. And on a daily and monthly basis, markets do go up and down. But sometimes, markets tend to crash down to the earth. Today at FinancePer, we'll learn about the 2008 market crash and why it happened. But if you are interested in finance stories, new technologies, and business tips and ideas, please don't forget to subscribe to our channel. Market crashes have happened all across the world. The very first crash was with the Tulip Mania in the Netherlands. Tulips. Yes, flowers are one of the commodities back in the 17th century Netherlands. To summarize the story, these tulips are being bought for their unique and beautiful bulbs, sometimes for over 4,200 guilders, or about $12 million today. Since tulips take time to grow, going for over 8 years, farmers and marketers tend to sell the tulip in a forward market, or where people will agree to buy or sell something at a future date and at a predetermined price. So why did the tulip market crash? Due to speculative trading, the prices of tulip bulbs soared to high levels, driven by unreasonable demand. Eventually, the bubble burst, causing a rapid decline in tulip prices and leading to significant financial losses for many investors, mostly low-paying craftsmen. Another crash happened in 1929. It was caused by a combination of speculative excess, overvalued stocks, and a lack of regulations. The rapid expansion of credit and margin buying fueled excessive speculation, leading to an unsustainable bubble in stock prices. When investors began selling their stocks in mass, the panic spread, which triggered a devastating market collapse that marked the beginning of the eventual Great Depression period in America. Let's jump the time period to the early 2000s. The housing market was booming. House prices were increasing 124% in a span of 8 years from 1998 to 2006. By 2005, almost 1.2 million new single-family houses were sold, compared to the average of 609,000 per year during the 90s. There was already an increased demand for housing. This, along with loose lending standards, allowed people to obtain mortgages that they couldn't afford. As a result, this created an illusion of wealth with their assets. However, in March 2007, the subprime mortgage industry collapsed due to higher than expected home foreclosure rates, or the borrowers just defaulted in paying the money they borrowed. This led to over 25 subprime lenders declaring bankruptcy, and one of the most affected was New Century Financial, which led to an 84% plunge before filing for bankruptcy. Another factor was the increasing price as demand soared. Now, the basis of economics states that demand will increase if supply is low, and vice versa. The housing supply is low, and there was a demand for housing. This triggered the price of housing to increase from about $100,000 in 2000 to reach $220,000 in 2006 at its peak, before completely collapsing in 2009. Do you think that the 2008 financial crisis is still felt up to this day? I want to know your thoughts and opinions on the comments below. But for more videos about finance, technology, and engineering, don't forget to subscribe to our channel. Now, after the housing bubble burst, the United States experienced a severe financial crisis that we now know as the 2008 market crash. Now, many banks and financial institutions faced significant losses, and some of them turned to bankruptcy due to the collapse of the subprime mortgage market. The crisis led to a global economic downturn, with high levels of unemployment and a decline in consumer spending. It already has been clear by August 2007 that the financial markets could not solve the crisis, and the cracks are now showing outside of the US border. The interbank market, that keeps the flow of money all around the globe, freezes completely due to the crash of the subprime mortgage crisis, now led banks to stop lending money to each other. Another bank that was affected by the growing financial crisis was Northern Rock, a British bank that was forced to approach the Bank of England for emergency funding due to liquidity problems. They were eventually forced to nationalize Northern Rock. Swiss bank UBS also became the first bank to announce losses of up to $3.4 billion from subprime-related investments. By the winter of 2008, the US economy was in a recession, and as liquidity struggles continued with the financial institutions, stock markets around the world were crashing ever since the September 11 attacks. But the US tried everything to stop further damage. They've cut their benchmark rate by 3/4 of a percentage point, the biggest cut in a quarter century as they tried to slow the economic crash. But the cracks continued. Bear Stearns, one of the pillars of Wall Street and was founded in 1923, collapsed completely. They were eventually acquired by JP Morgan Chase for a very low price of $2 per share, an almost 93% discount. This shocked the financial world, as the nation's fifth largest bank collapsed. The crisis soon finds its next victim, Lehman Brothers, or what is now considered the largest bankruptcy in U.S. history. Other victims were Fannie Mae and Freddie Mac, two of the biggest home lenders in the United States. They were eventually seized by the U.S. government to stop further damage. The damage has already been done, and in October 2008, the first bailout was approved. There was public outrage. People think that the bankers were being rewarded for destroying the economy, but the bailouts were successful and were able to move the economy again. These bailouts were already paid by the banks and with interest. And as we all know, the economy got better and was able to recover. And it crashed again due to the pandemic. But it is slowly recovering again. Crashes are sometimes unpredictable. It could happen today, tomorrow, or even the next decade. But experts have sometimes predicted these crashes. And one of those experts is British economist Jeremy Grantham. He predicts that there will be an eventual market crash this 2023. And if you'd like to know more about this, please check our channel and leave a like as well. But if you like topics about finance, technology, or business, don't forget to subscribe to our channel for more videos. But for now, this is Finance Spur. Have a wonderful day.